Okay, let's go. Task 3. So task 3 here wants us to produce a production budget. So this is a production budget. There might be some stuff later on, but let's look at the production budget first, or the makeup of that production budget. And you will see this again, like I say, the exam kit is very good. There are lots of these. So what do we see? So it starts off by telling us that in terms of finished goods, you have an opening inventory of this. You need to produce this amount because you're going to be selling this amount here. So that's your kind of sales budget there. That's what you need to produce, and that's your closing inventory. Okay, right. So I know I need to produce 348,000 units. So in this question, thankfully, there is no wastage, there are no leakages. So if I need to produce 348,000 units, the question tells us in terms of materials, you will need, in terms of production, 0.7 kilograms for each. So in terms of what I will be using in my production, I know I'm going to be needing 348,000 348,000 times 0.7. So let's just do that. 348,000 times 0.7 takes us to 243,600. Right? So I know this is what I'm going to need in terms of my production. Now, again here, if the question here is how many kilograms am I going to need to buy? Well, if you're going to need 243, and you also need to make sure you have 7,400 available as well, but you already have 8,800 in stock, it lists literally 243,600 plus 7,400 minus 8,800. Do all of that, and you will see that you have a figure of, well, so let's just do that. 243,600 plus 7,400 minus 8,800, and that gives us 242,200. And they want you to do a subtotal, so I'll just change my pen color, make that red. 8,800 plus 242,200 gives me 251,000. 251,000. That's that. I'm buying these at £1.45 per kilogram, so multiply £1.45 times 242, and that takes me to 351,190. Add the two together, and you have 363,510. And here it tells me closing inventory will be valued at the budgeted purchase price. So it's telling me that these 7,400 kilograms, budget them at the £1.45, right? That's the value there. So therefore, 7,400 times £1.45 takes me to 10,730, which must mean that the value here must be the difference between these two, of course, because, right, I have total, I must have used, just change my pen color just for effect. I must have used the difference between 363,510 and 10,730, right? You have all this in stock. This is what you have left. So you must have used the difference, which is 363,510 minus 10,730, which gives you 352,780. Right, good. All right, so let's look at labor. So what we have with labor is the interesting scenario. It tells us that each item takes 5 minutes to produce. So we are producing 348,000 units. So that's 348,000 units times 5 minutes, which comes to 1,740,000 minutes. But I want my answer in hours, so I divide that by 60 and I get 29,000. They're talking about overtime, so I suspect that you will have a total of 29,000 hours, because that's the total that you need to produce those units, because you're going to be making, you want to make all of them, so you will need overtime. The question here is, what do you have available to you? So you have available to you 164 staff, 160 basic hours in each period. So multiply the two, 164 times 160 will take us to 26,240, which means that we have a shortfall and therefore we'll need overtime hours of 2760. Now we are told that we pay people based on, it says here that um, I saw that, yes, £15 an hour. That's it. So 26,240 times 15 will take us to 393,600. And then it says that overtime is paid at 40% above the rate. So of course, there's a number of ways of doing this. You simply can just multiply 15 times 1.4 and then multiply 2760 times 15 times 1.4 because you're increasing, you're paying people at 40% above the normal £15 rate, and doing all of that takes us to 57960, and then you add all that together and you have a total of 451,560. Right. Right. So we're told here nicely that variable overheads are recovered on total labor hours. We know that's 29,000, and you are paying £2.60 per hour. And so you have a total here of 75,400. The fixed overheads are given to us, and so we just have to add everything together, um, adding all these costs. Um, well, add these together, and so add these together, and by adding these two together, you have a total of 170 and 60. Yes, because that's adding those two together, and that's us for this section. Let's carry on. Okay, so the second part here is filling this out. Like I said, this operating budget, we see a lot of this as well in the exam kit. So I'm going to be toggling between the two because the other section here, because you see here we do a lot of the work here. So we remember in the question they tell us that we are selling 340 items, 340,000 items. So I'm going to come over here and I'm going to place that here. So I'm selling 300. Oops, let's get rid of that. And then we have here 300 and, oh, okay, that's even more ridiculous. Let's just understand why that is on what, right? Okay, let's go for blue. No, let's go for purple. Let's go for purple. And let's just change the length of the there. So we have 340,000 units at £3.95. Plug that into the calculator. 340,000 times 3.95 gives us 1343000. Sorry, that should be over there. That should be over there. 1.343 million, if you like. And let's see, what do we have here? So we've got our opening inventory of finished goods. Of course, that's again coming back here. Our opening inventory of finished goods. In terms of their the cost given to us. It's sort of told us, has to be, although we know what the units are, but we are told what the cost is. That's fine. That's given to us. That's always been the case. So in terms of production here, so in terms of materials, all I'm literally doing again here is flicking over here and just lifting my cost of production, which is this figure over here, 352,780. So I'm just going to come over here and just plug that in, 352,780. And then if you go over to your labor figure, you just go over to your labor figure. Your labor figure, you can see here, was the 451,560, 451,560, and just do the same thing for your production overheads. Just come over here and pick that up here, and you have 170 and 60. Yes, that's the 170 and 60. Pick that up, 170 and 60. And of course, your closing inventory of finished goods. Let's just go back to the other page. Closing inventory of finished goods. Here we are, closing inventory of finished goods here, 34,200 units. Um, Here we are, 34,200 units. Let's see, 34,200 units. See how we quickly solve that one. Just sort of pick that out. Right, yes. So if actually, I had to pause there for a little just to sort of see how this all turned out because initially I thought they would have given us that figure, but just a little bit of working has to be done. Because first of all, what you're doing here is defining the total. There is one small assumption that we're operating on a first in, first out. I just wanted to verify that again. So you're adding all this together, which gives you the total cost of production. And of course, the total cost of production, of course, was 974,400. Now remember that you are producing a total of, let's just go there. If you come here, you are producing a, oops, sorry, let's just come here. 348,000 units, right? So 348,000 units 348,000 units is what you were producing, and that's the total cost of production. So the assumption is that your closing inventory is going to come from that bag, right? So therefore, the production cost of a unit, of course, is 974,400 divided by 348,000, which is equal to £2.80. So now my closing inventory, my actual closing inventory of products is given to me is 34,200. So therefore, if you have 34,200 times 2.8, what you get is, of course, 95,760. So you just had to go that one step, if you like, by, actually, I won't write this here. I'll write this here. 34,200 times 2.8. This is your closing inventory of units, but this is the actual cost because it's those closing inventory. That closing inventory is out of the goods you did produce. Of course it is. So in terms of cost of sales, of course, we have opening inventory, of course, plus, of course, production, of course, minus, of course, your closing inventory. And you have a cost of goods sold of 949,380, of course. And when you subtract this, of course, from the sales revenue, your gross profit is 393,620. And that's your gross profit. And of course, you have these overheads given to you. And when time you add these and subtract this from these, add these together, you have 280,000. And deduct that, of course, from the gross profit here, and you have operating profits of 113,620. And that's that one. Yeah. So let's finish off this question. Let's move on to the next bit. Right, and we saw a lot of this movement with cash flow statements, cash flow forecasts in the exam kit, and we see the translation or the of this coming down into right at the end of this chapter. I mentioned that you will get this. So we know from here that our it tells us here that our sales revenue is 1.343 million. That's what our revenue is. Now we move on to here, and it tells us that sales receivables are expected to decrease by £12,000. Expected to decrease. So technically, you have money coming in. That's what they're telling you, right, over that period, including your, including your, including your the revenue that you've made in that period. So I tried to show you using double entry when I taught this. Let me just erase this again and apply exactly the same. I've actually quite enjoyed using that purple over there for a while now. Just come here. So just using the double entry again here, what's happened here is that you had revenue, You had trade receivables and you had revenue, yes, of 134,300. You had 134,300. And the question says that receivables are expected to decrease from 12 grand to over the year. So imagine, let's pretend that you had an opening balance of 12,000 and a closing balance of 0. So the question here, I mean, you could use any two numbers that differed by 12,000. So the question here is that I have money going into the bank. I'll just write bank here of sort of there and there, right? Because this closes out. This is done now, right? So the question is, what must have gone into the bank? Well, it must be the addition of these two things together, right? And when you add these two things together, 12,000 plus 134,300, you will get a total receipt, what's come into the bank, if you like, of 135,500. Right? Because yes, if you add, remember this is 12,000, so this is the 2 plus the 3 and the 1 plus the 4, right? And then the 1, 3 on its own. So that's that. Because I don't have space, I'm going to deal with materials in this same page by just sort of cleaning this out and following exactly the same principle, if you like. So when I look at my materials payables, when we come back here to look at what we did with materials, let's just come back here to this page over here. And, sorry, let's just come here. Right, so in terms of my materials, there's a figure I am looking for. Let me just pause this to find my figure. Yes, so there's my figure here, my purchases. I paid, you can see it's all about paying 351,190. Well, that's what I purchased on credit. So going back to 351,190, let's just come back here. 351,190. So purchases 351,190, and I have a trade payable 351,190, and it says that trade payables are expected to increase by 4,000. So imagine I start the year with nothing, but I'm saying that by the end of the year I'm going to owe 4,000. So in effect, when I ask what I did pay to the bank, it's that which is the difference between these two, right? Remember that this closes out. So 351,190 minus 4,000, because bank is over here and that's what's coming out of the bank. It's sort of there, and you have 347,190. And I believe the question says that all other payments are made in the year. So labor, if we go back and look at labor, we will see that labor was for 451,560, 451,560. And it says the production overheads include a depreciation charge of 25,000. Let's just look at that. So production overheads was 170 and 60. So let's just go here. 170 and 60 minus 25,000, because this is not cash, and that comes to 145,000 and 145,060. Other overheads, and that's given to us as well in the question. If we look over here, that's given to us here. That's the 280,000. These are the other overheads, very similar to what was going on in the exam kit. 280,000, and then there's some capital expenditure. So we bang all these, add them together, and we have a total of 129,8810. And if this is what the receipts were, and that's what the total expenditure was, we have a closing balance there of 48,190. And that's how we deal with this one. So just a little point to highlight here. When we look at materials, we are interested, of course, in the spending on the material purchasing, and that's just this point here, because that's where we spent some money, isn't it? Here, and that's the important point here. So that's for purchasing here, and that was for sales. Sales will be given to you. Well, when I say given to you, that's this next page over here. What we did over here, that'll be given to you, and then the rest sort of sits in the information given to you here, and of course, um, labor and all the others we calculated earlier on here. We calculated how much we'd spent, and these will always be what they are, wouldn't it? Because these are all live. You can't store any of this. Cool, great stuff. And that is task 3.